Welcome back. Now, at the full year mark, Sirius Real Estate has reported a 0.7% dip in headline earnings per share. But on the bright side, profit after tax jumped by 65.1%, while operating profit grew by a similar margin. Shareholders have been rewarded with a total dividend of 6.15 cents, reflecting an increase of nearly 2%. Looking ahead, the group hopes to benefit from its increased defense spending geared towards the UK and Germany. Company CEO Andrew Coombs joins us with his take on the performance. Andrew, thanks so much for your time this afternoon. So most of the important key metrics are in the green, including funds from operations up 11.8%, and this also then led to a 23rd progressive dividend payout. Let's start there just by contextualizing the year that was for the company.
Thank you, and thank you very much indeed for having me on today. So we are pleased about these results. They represent a 75% increase in profits. Our profit before tax is up from 115 million to 200 million. That is in part because we have grown our rent roll on a like-for-like basis by over 6%. That might not sound much, but in an environment where inflation is below 3%, to grow organically by double the rate of inflation is reasonably good. What that has enabled us to do is to grow both our FFO and our valuation. We've been able to grow the valuation by 135 million euros because the valuers have had to take that 6% and apply a value to it. And what that has done is helped us to return 12.5% total accounting return, 7% of which has come from valuation uplift, and 5.5% has come from the payment of dividend. The 7% valuation uplift, 85% of that has come from the increased revenues that we've generated within the portfolio. And of course, in that period, we have gone out and acquired 270 million euros of new property. And we haven't yet seen the full effect of the FFO that that property generates in a year because the property was bought typically towards the end of this period that we're reporting on. So even if we do nothing from here, the next 12 months represents a reasonably good growth trajectory for Sirius.
Now, just paint a picture for me about how both markets performed. You touched on the tough macro conditions, but both the UK and Germany have their own problems. I mean, recently this year, we saw a snap election in Germany, and the UK is struggling with downbeat growth. Paint a picture for us then in terms of how you've navigated the environments.
So the German elections are the best thing that have happened for Germany for a very long time. Merz is now in power. His government is very pro-business. As you know, the government has loosened the debt brake, which means that there will be an extra 400 billion of defence spending over the next 10 years. Yes, that's billion, 400 billion euros of defence spending, and a further 500 billion of spending on infrastructure. Now, that will still leave Germany, even though it borrows that money, with one of the best GDP, LTV equations in European nations. It will still leave Germany indebted to less than 80% of its GDP. That will be a huge physical stimulus towards the German economy over the coming years. The UK this afternoon is due to publish its Strategic Defence Review, SDR. And in the SDR, they're going to explain about their NATO first strategy, and they're going to explain how many billions the UK is planning to invest in defence spending over the coming years. They're also going to explain how they believe that will help drive the UK economy positively. That said, the reason we are operating a business in the UK is because the asset class we operate in, light industrial, there is a shortage of light industrial property. And post-Brexit, the demand to use light industrial property in the UK is increasing. And in spite of whatever happens in the economy, that dynamic is very different from Germany. And the reason that we've been able to increase price by, typically 10 to 11% in the UK per year is because of the shortness of supply and the increasing demand.
Okay, so you seem quite positive on both markets, the UK and Germany. Moving forward, are you eyeing either territories, or are you going to stick to your guns with the UK and Germany?
We're going to stick to the UK and Germany. These markets are big enough. There's enough opportunity. We need to be good at doing the things we specialise in. We do not need to increase our footprint and dilute the effectiveness of our organisation.
And before I let you go then, Andrew, the group has been in this recycling effort where it's ditching some of the properties that are considered non-core and acquiring properties that fit more with the business's strategy. Are we done with that focus, with that process, or is it still going to continue into FY26?
So we believe that recycling is a very, very good discipline. It's a good discipline because it proves what the real value of assets is. We have been selling those assets at above valuation. It's a good discipline because it helps trim the weakness out of your portfolio. And it's really good when you look at something like Funkstadt that we recently announced. We bought it for 14.8 million. We've sold it for 30 million. So actually, when you take 50% of the redeployment of that capital being money that we've created out of management's efforts, when you actually just do the maths on how that works, that commercially is probably one of the best ways in which you can make money for your shareholders. So we will continue to do that. We will be net acquirers, but we will always continue the discipline throughout the whole of the cycle of making sure that we dispose of properties as well as acquire them.
All right, Andrew, thanks so much for your time and just taking us through the year that was for Sirius Real Estate. That was Andrew Coombs, CEO of Sirius Real Estate.